Well, hello everybody. Happy Friday. I'm Michelle Martin. It's so good of you to join us. Welcome to Money Matters, our platform where we chat about all things to do with investing, and I get to chat with you. So, it's really going to be a fun time. Here is our map to this evening. The heart of tonight really is to gain a very unique understanding of how millennials are investing. And so we've got some great strategies lined up for you, some stock plays. Yes, the metaverse will make an appearance, and I think a certain coin starring a dog is going to make a pop-up appearance as well. Number two, I have some great prizes to give away. So I encourage you to really test out that chat section because that is how you're going to win. So best question or comment is going to win a prize tonight worth over $280. So pro tip on winning, in the infamous words of my mother, someone's got to win. So it might as well be you. So I encourage you not to sit back. Don't be a bystander. Please participate. And listen, I need to know that I'm not talking to myself. So how about hitting a like button, if there is one, or saying hello through the chat section, the comment section, so that I know that you're around. And that's the channel, by the way, through which you're going to earn some great prizes. Sets of sheets, bed sheets that, I kid you not, are softer than silk. Yes, all thanks to our sponsors, Heavenluxe. We are live, and I want this to be as interactive as possible as you listen to our featured guest tonight. He's absolutely wonderful. So please send me any questions, things that you want clarified along the way, so I can put them to our fabulous guests. It is time for me to hear from you. Let's see if that comment section is up and running. Here is your poll question tonight, all right? How much in savings and investments would you like to have in the next 5 years? Well, hello to Gerard. Thanks for joining us. How much in savings and investments would you like to have in the next 5 years? Is it 500,000, 100,000? Is it, I don't know, 150,000? I would like to hear from you. Answer our poll question. It's going to be up throughout a whole segment. And that is your chance to walk away a winner, okay? Heavenluxe sheets. Last time I tried to buy them, they were completely sold out. So get your hands on these sheets while you can. I mean, it's free. I have 2 sets to give away. It might as well be you. Remember that. Why are we diving into understanding millennials and the millennial effect tonight? I hear some of you and you're thinking, shouldn't we be studying Warren Buffett or Ray Dalio? Why on earth are we studying millennials and what millennials are doing? Well, they aren't exclusive. You can study millennials and study Ray Dalio. And by the way, you should read Ray Dalio's latest book. It's called The Changing World Order, and it's absolutely terrific. But why on earth should a group of young people born in the late 1970s, millennials or Gen Zs, why should that group matter? Well, there's a great Fortune headline that says it best. Millennials are a force in investing, and markets need to catch up. So you're saying, what is this millennial effect, Michelle? Well, we're going to find out today. This group matters because if we want to understand what's coming up next, it's millennials and Gen Zs that are driving capital to new frontiers, guided by very different priorities from the generations that have come before them. I'm going to throw out a couple of stats for you. And thank you very much. The answers are coming through. How much in savings or investments would you like to have in the next 5 years? Somebody saying 1 million? Aim for the moon. Why not? Any other answers? Send them my way. So let me show you some stats. All right, 31% of people in the US start investing before the age of 21. And in Singapore, according to my friends SingSaver, 63% of us started actively building our wealth before the age of 30. So millennials making a move. They compose the largest workforce in the US, in US history, in fact. And they'll be receiving trillions in wealth transfers. So millennials save more, they invest according to different principles, they value a healthier planet and business accountability, they have a greater inclination towards decentralization, they have the capital to walk their beliefs. So the world of finance is sitting up, and platforms and wealth advisors are all anxious to understand millennials. Now, our guest is a millennial. and frankly, one of the best speakers that I have heard on this topic. He's clear, he's compelling, and tonight we've worked out a program for you so that you hear about the sectors and the verticals that matter to millennials. Sportswear, mobile, e-commerce, digital payments. Which sectors are trendy and which are here to stay? Which sectors are nascent maybe, and what is so over? We have a wonderful guest joining us today. His name is Timothy Phillips. Tim is Head of Content and Investment Lead for ProsperUs by CGS CIMB Securities. He'll tell you what that platform is all about. Now, his day job is creating compelling content. So, good match with what we do here on Money FM. And he was previously with the Motley Fool and Schroders, both in Singapore and Hong Kong, and he focused mainly on Asian equities. But Tim believes in buying great businesses, wherever they may be. And he's got some ideas on great businesses to share with us today. Tim, welcome.
Hey, Michelle, how are you?
Great to see you, Tim.
Yeah.
In person. All right,
Yeah,
listen, you're going to tell us about the difference between millennials and Gen Z. So here's a question for you, Tim. How many more years left do you have technically of being a millennial?
I think about 3 or 4.
Three
Yeah,
or four.
3 or
I'm
4.
glad
Yeah.
we got you while you're still a millennial.
Yeah, I know. I'm just sneaking in there. I'm just sneaking in there. But I feel old now compared to some of these Gen Zers.
Well, thank you all for joining us. Gerard, Christopher, all of y'all online with us on YouTube as well. Please send us your comments and your questions along the way. Tim, at what age did you start investing?
I actually started investing when I was about sort of 18 or 19. Like my parents got me interested in it. My dad kind of was interested in stocks and stock market. So I was actually really lucky. And I learned from him, about just investing regularly, saving, making that money grow, and I guess taking the patience to stick with it. So I learned a lot of great things from my dad and from my parents during that time. So yeah.
Absolutely fabulous. Go, Dad. Well, thanks to Dad. Tim is with us. Tim, all eyes and ears are on you, so take it away.
Great. Thanks, Michelle. Okay, so I'm going to start with a little introduction just to ProsperUs itself, which is our digital investment platform by CGS CIMB. And so what we're doing is we're trying to basically create a new investment service for millennials, by millennials, but that's just our tagline. It's for everyone, obviously. And I think what we're trying to do is give access to multiple markets across multiple asset classes. And along with that, I also have a lot of educational content, a lot of compelling, interesting content focused on emerging trends in investing. So please do check us out. I'm going to go into the compliance issues. This is not meant to be construed as personalized financial advice, et cetera, et cetera. So compliance team won't want me to say that. So that's just out there. Do obviously your own due diligence, but I've got some ideas here. Hopefully you'll find interesting. So I think let's start with what is a millennial and what is Gen Z, right? What are they effectively? And so I think there's always this misconception that we just lump everyone together. I think there's always talk of being just millennials, right? Millennials, but actually we're Gen Y. So those born between 81 and 96 are technically classified as millennials. And then Gen Zers is anyone from 1997 to 2012. So there are lots of Gen Zers now who are actually starting to come into the investing world and starting to impact the trends that we're seeing. And the great thing about this is they're technology natives, right? So Gen Zers, they've grown up with technology. They've grown up with that smartphone. I mean, if any of us remember what a floppy disk is, I have nephews now who just have no idea what that would be, right? And people who are sort of in their teens now would never have heard of a floppy disk or have any idea what it is. So it's kind of those types of, I guess, idiosyncrasies with how technology has progressed. It's kind of interesting to see. And how do they impact the world, right? That's what I think they're really starting to take a really keen interest in. So when they do invest, they want their investments to do good for the world and not just maximize shareholder value and maximize profits. It's about doing both, right? You can earn a return, but you can also drive a positive impact in the world. So this is an example of what happens when maybe older people hear what Roblox is. I just thought I'd use a fun skit from 30 Rock with Steve Buscemi, trying to fit in with the kids nowadays. But I think it's really encapsulates the, I guess, investing ethos that we should take on is we should really be open to learning about these trends, right? I don't think we should just dismiss everything, but we should question everything. That's for sure. We should question it, but we need to be open to learning about it, because I think these types of trends are really going to shape the investing landscape and actually the world in the next sort of decade. Okay, so let's look at some of the trends and how they're investing. We look at the rise of the younger investor, and it's actually quite phenomenal how fast they're entering the stock markets and just basically investment markets more broadly. So actually, since the pandemic, around 10 million new retail investors have begun trading in the US alone. But can you imagine if you extrapolate that globally, how many international investors have been investing into the US as well? It's probably at a multiple of 5 or 6, I would imagine. And that generational divide that we saw with boomers just making loads and loads of money, and obviously holding a lot of that wealth, that over the next decade or two is going to be transferred, obviously, to Gen Zers and to millennials. And if you can see on the right hand side, you can kind of see by 2040, Gen Zers, in terms of their income globally, and in the US, it's going to be surpassing millennials and my age cohort. So it's an interesting transition, I think, and it's going to really impact how we think about investing and how capital flows are going to be directed. And that's partly a product of the circumstances we find ourselves in, right? I mean, this is a chart from the start of the pandemic. Obviously, 10-year yields have gone up a little bit, and they're at 1.67% now, so obviously higher. But how much higher can they go, right? Do we see them going back up to the 15% of the sort of late 70s, early 80s? Probably not. And is there a cap to how high yields can go, right? We've seen talk of the tapering, and then we've seen talk of the interest rates going up, and it being priced in, but yields haven't really shot up yet. So it's an interesting contrast to understand how markets are actually viewing the ability of, say, the Fed to actually start raising interest rates. It's probably limited. And because of that, we're not getting any returns. And so a lot of money is being driven into stock markets and obviously other asset classes like crypto. And also technology, right? We always talk about technology driving down the cost of everything, and that also includes investing. So maybe 10, 15, 20 years ago, you talk about making a trade and it costing $25, $30, $35. I mean, this is an example from Hong Kong, where I'm from, and you're already starting to see commission-free trading moving into the Hong Kong market. ProsperUs ourselves, we have a lower commission rate as well for US trades. So I think this is the kind of space that we're seeing a lot of investors come to expect. They're coming to expect low cost trading, low cost investing, and that's driving a lot of activity, obviously. One thing that they do want is a positive impact, right? So this is an example actually taken from a global investor survey by Schroders, my former employer, from 2020. And if you think about the impact of millennials versus non-millennials, most millennials actually want to have a positive impact on the environment. And I think you can kind of see it's close in a lot of areas. But one thing I found interesting is that they invest in sustainable funds. That's something that they really are keen on. And the last one, which I'll touch on a bit later, is they're a lot more willing to buy things secondhand, and that includes clothing, which for a lot of people maybe would be just an absolute no-no. But for millennials, people are becoming a lot more conscious, and the clothing industry is one of the most polluting industries in the world. So a lot of people are now thinking, hey, how can I make a difference to this planet? How can I make a difference to this world? Buying clothes secondhand so that they don't go to waste. That's a thing that people are increasingly starting to do. And you don't want to push them, right? There's a lot of this cancel culture, whether you agree with it or not. It is part of what's happening, at least in the West. Whether that comes to Asia is, not sure, but there's definitely an element of that everywhere. And so you need to be, I guess, conscious of the zeitgeist in the millennial and Gen Z segments and what's happening in those areas as well. Okay, so I'm going to touch quickly on types of companies they're buying, which I'm sure people are kind of interested to hear about. So I'm going to start off first with, how do boomers view millennials? I think there's this massive generational divide, and it goes through from politics to investing. And so when millennials talk about investing in, I don't know, crypto or investing in the next hot stock, I think a lot of boomers and a lot of older generation people just say, you don't know anything, you need to learn, the basics. And there's some truth to that as well. But then how do millennials view boomers, right? when they tell us to buy dividend stocks or, an oil company or a tobacco company, that's the kind of reaction you might elicit. So I think there's always going to be a divide between how the older generation think and how millennials think. But I think if we can come meet in the middle and understand where the future lies, I guess for investing as a whole, that's where the opportunity will be. Okay, so I'm just going to touch on a few trends. And so one of the big things in the US, which I think maybe people aren't familiar with or as aware of, is that e-commerce in the US is actually just getting started. So I use two charts here to illustrate a point which maybe is not so obvious. But if you think about the penetration rate of e-commerce, what you want is, if you're looking to buy a stock, you want a growth stock that has obviously lower penetration, so the runway is bigger for that growth, right? And so if you think about the US retail sales, if you think about e-commerce as a percentage of the total, even in 2020, there was a massive jump. Obviously, you can see the red line, the growth rate jumped. But even then, it was still only 14% of overall retail. You look at China, it's approaching 50%, and you're thinking this year, the forecaster is going to be over 50%. So the saturation in China is actually a lot higher, which is one reason I'm not that jazzed about e-commerce stocks in China as an investment, in terms of a growth investment at least. Whereas in the US, you're really just getting started. So I think that blue line there in the left-hand side chart, that could actually grow a lot faster than we anticipate, or rather than eMarketer anticipates here. So that's something to keep in mind when we think about e-commerce as a trend. And there's also niche e-commerce verticals, and these are all fair game, right? There's this I guess there's this thought that Amazon dominates everything, and they do dominate a lot, right? There's a lot of spending going through the Amazon platform, obviously, but there's been space for specific e-commerce companies to actually carve out their own niches. And so on the left-hand side, you're thinking about pet care retail. There are some really interesting companies in the pet care space in the US, like Chewy, which is an online-only pet care e-retailer. And it's done a lot better than Amazon in terms of its Amazon, pet goods sales. So I think there is definitely space for specific retailers to make a name for themselves on the e-commerce side. On the right-hand side, we've got Etsy, which I'm going to touch on later as well. And Etsy is really sort of the anti-Amazon of retail, at least e-commerce in the US. And what they do is they provide artisanal, handmade goods by lots and lots of sellers, right? So small and medium-sized businesses, or even individual sole proprietors that they want to make an extra income, and they start selling their goods on Etsy, and it's a marketplace, and it's kind of like a really prosperous flywheel. They get more buyers, they get more sellers, and they've started to build a stable of brands themselves, which I'll touch on again later. Okay, so digital payments, as Michelle kind of mentioned, this is one that is obviously a big theme during the pandemic. It's slowed down. You've seen a lot of maybe disruption in between the start of the pandemic and how we're coming into 2022. But these charts are taken from Kathy Wood's ARK Invest big ideas report. And so if you think about customer acquisition costs across the financial product spectrum, a digital wallet is really tiny, because the ability to scale that is just so easy, right? And so the cost of acquisition for those customers comes down. And if you look on the right-hand side, where is the most value from these digital wallets? Where is it coming from? And the biggest is actually offline online commerce, so e-commerce. And what you're kind of seeing is a lot of these e-commerce players starting to build their own ecosystem and their own payment system. So you're seeing like C Group, they started C Money, and they're really starting to grow that out, because they realize they can meet the consumer at the point of purchase, and they can actually cut out these guys like Visa and MasterCard, which is one reason why I think Visa and MasterCard are at huge risk of being disrupted, because these guys are building their own payment systems. Mercado Libre, even Shopify is starting to do that as well. So these types of companies realize that a lot of digital payment and e-commerce, they're quite intertwined. And so if one is doing well, the other one tends to do well. And if you can meet the consumer at the point of purchase, you should do that, right? You may as well do that. Okay, so as I said, Shopify. So that's my first idea. I think this company is just a really great example of riding on a big trend and doing really well, executing to a T, basically. And what is it? It is the infrastructure of e-commerce. Effectively, it's the online storefront for for digital e-commerce. So if people want to build a digital storefront, they go to Shopify. They basically help you with the marketing, they help you with the payments, they help you setting up the website, and they help you with shipping, they help you with loans if you need to. So they're moving into all different sorts of verticals within e-commerce. And again, what they want to do is they want to give back the power of retail to the actual business instead of becoming a marketplace like, say, an Amazon, right? So they're definitely targeting different businesses to Amazon, in a sense that Amazon has its own maybe inventory and it does a lot of its own shipping, whereas Shopify is serving a lot more small, medium-sized businesses, but they also do have some big brands on their platform as well. And again, it's just getting started, right? If you think about the share of US retail, Amazon has about 39% of online retail share, and the GMV, or the gross merchandise value, flowing through Shopify's platform is only about 9%. So there's a massive opportunity even today for Shopify to continue to grow. And what does it give you? It gives you a lot of growing optionality, right? So I think Shopify has been able to really grow out its ecosystem really, really well. And that's one key thing which I think maybe other people hadn't really seen beyond back in the day when they IPO'd in 2015. And since then, it's up about 70x or 72x, something crazy like that. But it's because it's been able to keep growing its business and keep expanding its platform and expanding its partnerships as well. So when it started out, its first quarter being public, I think it did about 45 million in revenue. In its latest quarter, it did about 1.12 billion. So you can kind of see the phenomenal growth in about 5-6 years that it's been able to post. And that's because it's expanding into everything. It's working with TikTok, it's working with Walmart, it's working with Facebook Shops. It's moved into fulfillment. It does marketing for its merchants. It's now got a payment gateway set up. So these are all different things that it's starting to move into, and it's really starting to make itself a core piece of the e-commerce infrastructure globally. And this is a perfect example of a partnership that they did. They did something with Spotify, where you would just think, okay, how is Spotify, setting up a shop? But it's using Shopify to help artists meet consumers who want to buy, merch on their Spotify artist profile. And so you're using Shopify, you get a 90-day free trial. If you're an artist, use that storefront, and you can start selling your own goods on Spotify, right? So I think what they want to do is they want to meet consumers wherever consumers happen to be, whether that's in TikTok, whether that's on Spotify, whether that may be on Snap, maybe on Pinterest. It's working with Pinterest. So they're making themselves visible on all different platforms, omni-platform, and so that's a key selling point for the.
I'm just going to jump in, Tim, because we've got a whole string of really great questions coming your way.
Yeah.
And this one from Christopher, who wants to know, is it too late to FOMO on Shopify? Is it too late to jump on? I mean, I'm looking at the share price, Tim. Shopify, $1,628.70.
I know. Yeah. No, I think when I started investing in it in 2019, I thought the same. But I think it's still got just enormous growth ahead of it. I think the e-commerce factor is actually one part of it, but as I'd mentioned, the payments is something that isn't really being priced in, or people are not really thinking about, as I'd said, with cutting out a Visa or MasterCard. And so this is another thing that relates back to PayPal, right? You've seen PayPal share price get, I guess, pummeled in the past 5-6 months. And I think there's a lot of worries with Shopify eating its lunch, basically cutting out PayPal, cutting out these types of payment companies, and just going straight to the consumer and using their own payment gateway. So I think that's one reason why PayPal was actually thinking of buying Pinterest, and you can kind of see why, because they want to meet consumers at the point of purchase, right? And Pinterest would have been a great acquisition for that purpose. Obviously, it didn't turn out to be that way, but I definitely don't think it's too late. I think the growth runway for e-commerce, as I said, in the US and globally, is still huge, and Shopify earns most of its money still from North America. So the growth opportunity internationally, I think, is still there, especially for SMBs who want to set up their own online storefront, right? They're most likely going to be using Shopify software.
You bought into Shopify in 2019. Do you remember what it was then?
I think I started my position at like maybe $200.
Oh my gosh. This is why we need to start investing early, people.
Yeah. I mean, yeah, you don't need to take a massive position. I think just getting started is the way and see how it goes, right? Just monitor it and see if you want to add on later. But if the business is continues to do really well, then there's no reason to not add on later. Yeah.
And now you mentioned that, you're more towards the US in terms of growth opportunities, at least
Yeah.
in terms of thinking through e-commerce. We've got a question from Nick Go, who
Yeah.
asks, with the regulatory crackdown and billions of dollars lost, what is some advice you can give to people who are looking to invest in this
In
area,
there.
China and
China,
e-commerce there?
I think it's become a lot more of a minefield, to say the least, obviously because of the regulatory issues that Nick mentioned. I think what I would suggest is you don't it lends itself to active stock picking, but then again, you really need to be on the right side of regulation, right? Because if you're in a massive tech ETF, you would have been wiped out, I guess, similarly to Alibaba, Tencent, those types of big names.
Yep.
So if you want to be thinking about local consumption stocks, I mean, I'm going to touch on something later, a sportswear goods firm from China. If you want to think about healthcare, I think then you need to be in areas that are not going to be not going to be, I guess, in the um, basically in the sights of the Chinese government, right? So I think it's more about thinking about maybe A shares. I think A shares ETFs are actually great ideas if you want exposure to China, just because they are really keen to grow their own local equity market, and the local equity market has a lot of those hardware type names, like where they want to build out the chips, whether they want to build out clean energy, whether that's maybe BYD, or there are some solar panel manufacturers as well. So I think those things are going to be really favored by the Chinese government. I don't think there's ever going to be an issue with them, maybe on data privacy or taking advantage of consumers, just because what they do fits in with the Chinese government's overarching goals.
Okay, and because this segment is meant for millennials and we've got young people joining us clearly, here's one from
Yeah.
Nurul asking, should I pick my own stocks? And if so, how should I decide? And if not, how should I vet the person who will be handling my investment?
I think picking your own stocks, if you're just starting out, my advice every time you are starting out is to either buy an ETF. I think starting out with an ETF, because that's a really great diversified way to get exposure. It's definitely not as volatile. It's a lot less risky than buying an individual stock. And follow that for a while, understand what that gives you, and then if you are going to buy funds, really take a close look to what's inside them. Same with ETFs. Look at the fees. I think fees are really important for investors now, right? Maybe there's been a lot more positive coverage for ETFs just because they're so low cost. So I think for young people, for us, it's like great to invest in ETFs just because it's so low cost and it tracks the market, right? So unless the fund that you invest in are able to beat the market and beat the benchmark, you may as well just put your money into an ETF, which is what a lot of people have thought about, right? So
Yeah.
it's the same with picking stocks. When you do compare yourself to picking stocks, you really have to benchmark yourself against, say, the S&P 500, because if you can't beat the S&P 500 over, say, at least 3 years, I mean, I'd say this year has been a bit volatile, so give yourself a bit of breathing room. But if you're not outperforming over 3 years or 5 years, then you may as well just stick it into ETFs. That's how I view it.
Good advice, good advice. But it can happen. I mean, I met a woman, had her on my show a while ago. One stock bet basically on the Vanguard S&P 500 ETF. Started with $100 every month in it,
Yeah.
compounded over 20 years, and that was how she built her first million.
Yeah, yeah.
So
No, that's it. That's it. It's all
yeah.
about compounding. And, over time, if you look at the S&P 500, it's a line up. There's obviously dips, but it's gone through two world wars, a depression, a financial crisis. So if you have that ETF tracking that index, you should be okay over 10, 20 years.
I'm going to jump back out because Tim has a lot of great ideas to share with us. And I think this is the value of things like this, Nurul. Thank you for that great question. But you want to understand how investors think through companies. So let's all turn the spotlight back on Tim for an
Sure.
understanding of that. Take it away, Tim.
Thanks. Okay, yeah. So Spotify, I'll move on from that. So that Spotify and Shopify working together, that's just another example of how Shopify is making itself known in different channels. And I said, as I just touched on with Michelle, payments is massive. It's huge, and they're just getting started. They're starting to offer Shop Pay to all their merchants, regardless of whether they're on the Shopify platform. So eventually, whenever you go onto a website, even if it's not run by Shopify, I think Shopify's goal is for that, Shop Pay to be there as an option for them to check out or check out with, right? And they've done a lot of studies on with their own merchants, and merchants are seeing a lot faster conversions, a lot faster checkouts rather, and higher conversions when buyers are using Shop Pay, and also fewer abandoned carts. So I think this is what they really think of as the next evolution of their platform, is actually thinking about merging e-commerce with payments. And they've kind of forged the partnerships in those key channels, as I said: TikTok, Pinterest, Walmart, Facebook, Instagram. So all the big ones are covered. Okay, so number two, this is the metaverse, which Michelle had touched on earlier. So Unity, which is one of the biggest gaming developers out there. And so there's been a lot of talk about the metaverse recently. There's been a lot of price action on some of these stocks, which, to be honest, I don't think is maybe rational at this point. But having said that, I think these companies are going to be huge in 5, 10 years, and they are already starting to gain a lot of traction. So Unity is one of those companies which I like to talk about as sort of a building the metaverse, like picks and shovels play of the metaverse. So what they do effectively is they're actually the leading gaming software development provider. So the gaming engine. So it's them and Epic Games, which is owned by Riot, right? So they're the two big ones. But actually, Unity is a lot bigger because it does it across platforms, whereas Epic is a bit more focused on the console, whereas Unity is focused on a lot more of the mobile experience across different platforms as well. And if you look at that stat there on the left, 2.8 billion monthly active end users of content created just using Unity software. So it's huge. And what they're doing is they're starting to build out their capabilities into real-time 3D. And that's powering new verticals, right? New markets. So they're not just going to become gaming, they're going to be in different verticals as well. And then on the right-hand side, they've got really consistent revenue growth from two main operations, which is Operate and Create. The Create solutions is a lot of the gaming tools, a lot of the creation tools for making those games. And the Operate solutions is actually becoming more of an ecosystem now, where it's allowing companies and individuals to monetize the content that they make, whether that's through ads, being placed within games, or whether that's ads being placed maybe if you're buying something and you're using augmented reality or virtual reality and thinking about how that fits on you. So like these types of things where they're placing ads, it allows the content creators to monetize their content, which I think is really crucial for Unity, which they've done a great job of. They have unbelievable optionality, again, as I'd said. So this is just looking at the 7 layers of the metaverse. And they are basically present in the top 4, right? They're in games. They have the ad network, which is called Unity Ads, where you're able to monetize your content. They also have the sort of the design tools as well. They're starting to move into virtual augmented reality for companies, as diverse as architecture, auto design. I think they had a partnership with a healthcare company where they're allowing surgeons to use augmented and virtual reality to do practice surgery as well. So there are lots of use cases for its technology, and they're starting to build out that capability as well. And then the 3D engines, right? VAR, VR, AR, that's where they're also specializing in. So they have a lot of optionality and a lot of growth potential in a lot of different verticals. So this is an example of one of those verticals. They're actually using UFC. They worked with UFC to launch a sort of a 3D rendered, real-time 3D rendered camera sort of experience, sports entertainment experience online. And so what they had done is they had placed about sort of 7, 8, 9, 10 cameras around, and had built basically a digital twin. And what they've done, this is called Unity Metacast. It's actually a new service that they've launched. And what they're going to be able to do is you're going to be able to watch this in real time. Maybe you'll be able to see what the UFC fighter is wearing. the shorts the brand they're wearing, and maybe you're going to be able to go buy that in app, right, or in that virtual reality. So I think there is lots of optionality for content creators and for these companies to actually start using Unity software to monetize what they're showing. And then again, this is going to create lots and lots of opportunity, within the metaverse itself. And on the left is a really great quote from John Riccitiello, who's the CEO, from the latest earnings results. What you're going to see within the metaverse, and this is true, is that consumers, they really want to be able to. The war is going to be over the best content, right? And in this war, the ammunition is going to be art, and that's what Unity provides. Unity provides sort of that color palette, that the paintbrushes. They give them the ability to paint that world and to monetize that world, and so that's going to be crucial. And they've done a really great job of doing it, right? So this is the net expansion rate is a metric that's actually used for software firms a lot. So anything above 100% is basically means if you don't add any new customers whatsoever, and say you have 120% net expansion rate, that means you're getting 20% more revenue from those existing customers every quarter, right? So actually, when you look at software names now, I'd say the median is around 120 to 125. And so you're looking at Unity looking at 142 over the past 2 quarters. So they're exceptionally good at monetizing their own clients, existing clients, without even considering the addition of other clients to their set. And they're growing in the right direction, right? You look at Gollum over here. Who was that done by? That was done by Peter Jackson in Lord of the Rings, and he works with obviously Andy Serkis. But that type of movement and that type of augmented, those type of visual effects is one reason why Unity just bought Peter Jackson's firm for about $1.6 billion. It's called Weta Digital rather, and so what it's going to do is that's going to add a lot more tools to Unity's set to allow content creators to make more realistic flora, more realistic trees, just things within the environment that they want to make more realistic. They're going to be able to do that with these tools. And so it's now a business that with a revenue run rate of over $1 billion. And it's an unbelievably consistent grower. I mean, it has been growing its revenue north of 30% for the past 12 quarters. Obviously, at this point, they're operating cash flow negative and free cash flow negative. So you have to really take that into account, but their cash position is pretty strong. But it's one of those companies that continues to grow. It's a consistent grower, and they manage to monetize their clients consistently as well, which I think is a great thing. Okay, I'm going to jump into the third idea, which is Etsy. And so Etsy is a artisanal e-commerce brand, as I'd mentioned before, and as I said, the anti-Amazon of e-commerce. So what it allows is it allows individual sole proprietors or small businesses to kind of be set up on their platform and
Tim?
then sell. Yeah, sorry.
Can I jump in? Because the questions are rolling in again. And just before you get onto Etsy, I want to ask a couple of questions about the metaverse. So, Korea has multiple metaverse ETFs, and we have some questions on whether or not it'd be better to invest in ETFs in this segment. What do you think?
I think there's in terms of Korea, I'm not actually that familiar with the Korea ETFs. I've seen like Roundhill has an ETF that focuses a bit more on, I guess, the US growth market, and the ETF the names there. But I think if you're thinking about Korea, I think
there's a Mirae Asset Tiger FTSE Metaverse ETF, for example, largest in Korea by market value.
Sorry.
That's right.
Yeah, I wouldn't talk about Korea, because I think Korea is still in the early innings, and maybe it's not as developed. I mean, obviously, I think Korea is a big market, but I'm just more worried about maybe the liquidity in Korea and where it's going. If you're thinking about an ETF, I would probably focus on an ETF that focuses on the big, larger cap names in the US, which I think is a Roundhill ETF. And if you look through, the top 10, you find all the big names in there like Microsoft and Unity and et cetera. So, I think ETFs work are a decent way to play it.
So there are many different metaverse plays. And Dave wants to know, what is your take on NFTs as alternative investments? If art, as you say, is going to be the major weapon in this, art is going to be so important to the development of the metaverse.
Yeah, I think NFTs are a really interesting asset class, actually. I mean, alternative
Okay.
asset class. I just wonder, I mean, how is it, how they get valued? I guess it's just what they're worth, what people are willing to pay for them. But I think they're a useful way of maybe copywriting something and selling that on. As an investment, I think it's obviously really nascent. It's even newer than crypto, so I guess it
Mm.
will take time to see how it plays out. But I think the asset class itself, there will be lots of use cases for NFTs, and I think they'll be increasingly common over the next sort of like decade.
What do you think about NVIDIA, for example, the hardware people involved in the building up of the metaverse?
Yeah, I actually really like Nvidia. Um, I saw Jensen. I saw Jensen Huang like give an interview a few days ago,
Hmm.
and he's got a really interesting take on how he sees it. Right? I mean, he calls it the omniverse, which is a bit different to the metaverse, but it's basically the same thing. And what he sees is lots of companies basically using the metaverse to save money in terms of processes, in terms of design. So I think the enterprise factor in terms of like costs, it's going to save a lot companies a lot of money. Think about designing a car. Think about architecture. If you can iterate things in the virtual world, in the omniverse or the metaverse, how much you would save, I guess, in materials. One, how much you'd save maybe on travel or collaboration costs if you have to go travel to do something. If you can do that virtually and you can get the same results and then go build that directly rather than going through however many iterations, as a designer, as an architect, or as an auto designer, imagine how much could be saved in terms of costs, right? So I think that's one of the key benefits of it. I think NVIDIA will drive that obviously with its graphic cards, its computing power. I think it's really the foundation of the metaverse will be NVIDIA, which is why I think NVIDIA, for me, over the next 10 years, I would be more bullish on NVIDIA than Tesla. But that's just me.
Interesting. All right, Ian is frantic. Ian is, wants to know what he should look for. You mentioned Unity. Is it Unity software? Is it Unity technologies? Can you help
Yeah.
Ian out?
Yeah, so the ticker is U. I think it is Unity Software. I mean, it's interchangeable. It's Unity Software, Unity Technologies. NYSE is listed on the New York Stock Exchange. It's yeah. Sorry, I think I may have put Unity Technology, but it's Unity. It's interchangeable. Unity Software. So the ticker is U, basically the letter U. And so if you just go to just put NYSE U, you should be able to find it.
I hope we helped you out, Ian. Before we move on to Etsy, poor old Etsy, I spent a lot of time on Etsy. Christopher wants to know when it comes to payments, you were talking about payments slightly earlier. Are
Yeah.
traditional payment providers like Visa and MasterCard going the way of the dodo?
I personally think they are. I've personally not invested in them, and one of the reasons I didn't invest in them is I think they're the rails, right? And they're just one set. They are the key rails because that's what everyone uses. But when you have a merchant set and you have a consumer, I mean, the consumer doesn't care, right? Because we don't pay any more when we use a credit card, but the merchants care because they get like 2-3% taken off like the fee,
Right.
right? And so when merchants grudgingly have to give their money to a business, that to me doesn't really it doesn't really feel as though that business is going to be sustainable long term, right? So why one reason I really like Shopify is I think Shopify gives the tools to merchants. They empowers them, and merchants really love working with Shopify because it gives them the tools to be able to, ship or to set up a site really easily. Whereas with Visa and Mastercard, I just feel as though until something better comes along, they're the default, right? But it's not as though merchants love using them and love
But
having
even
them.
if you have a card, even if Shopify gives you a card, don't you have to eventually pay for it with your Visa or MasterCard?
Well, if you can start linking it to a wallet, if you have like an Affirm or if you have like a payment gateway and you can link it to your bank account and you don't need to start using credit card points or you're not that bothered about credit card points, then I think it's changed the way that we shop. If you look at Affirm and Afterpay and the BNPL names, they don't need to be linked to Visa or Mastercard, right? And so if this is the new way of shopping, and if younger investors or younger people are a lot more comfortable using debit, and they're just taking directly out of their account and not using credit, then I don't really, yeah, I mean, I'm not that bullish on Visa or MasterCard. And you saw that play out with Amazon recently. I mean, Amazon, there are ulterior motives there with MasterCard, I think, but the crux is that they were big enough to be able to push back against Visa, right? Whereas these small
Right.
businesses, they don't have the power to do that. And so I think that's why if there's a better alternative, small businesses will jump.
And since we're talking about businesses that millennials use, do millennials like buy now, pay later companies? Christopher asks.
I think they do. I mean, I've seen Affirm get a lot of attention just from different forums. I think Affirm is a big I guess people are really bullish on it. As a standalone company, I don't know how much more individual BNPL companies can do. If they're you're seeing I guess the likes of, well, Square bought Afterpay, but then Affirm is working with Amazon, but then eventually do they how are they going to grow? Are they going to become a payments ecosystem? So I don't know. I mean, personally, I'm a bit more doubtful on BNPL as an investment,
Mm-hmm.
but I do see them being popular, that's for sure. So it is popular, I think, also because millennials are used to buying maybe on BNPL. At least in the West, it's maybe not as popular in Asia, but people are definitely more comfortable buying in installments in the US and Europe.
All right. Well, thank you all for your questions, and please keep them coming through. I see a lot of you have got your critical thinking caps on, which is just terrific. Love the engagement. Tim, take it away with Etsy.
Sure. All right. So let me get back to Etsy. As I said, the anti-Amazon, right? So Amazon is one of those big conglomerates, one of those big, a lot of people, maybe younger people view it as an evil corporation. It's really huge. In whatever take you have, I think the Etsy experience gives you something completely different to Amazon. So I think that's really what has made it stand out to consumers. And some of the new initiatives like planet-friendly packaging, they actually take a very different approach to delivery. They're not big on same-day delivery. I mean, Josh Silverman, the CEO, in the latest earnings report actually talked about how same-day delivery or two-day delivery or whatever it is it's actually not positive for the planet, right? Unless you really need it now, it's not necessary to get that product, in one day. Maybe you can wait a week, or you can wait, a few days. It's not a big deal. And so I think when people buy goods on Etsy or they buy presents on Etsy, it's not something they need right away, like maybe they would say on an Amazon or your groceries or a Shopee. So it's just a bit different. It's got a bit of a different proposition, and it plays into that, I think, more socially conscious consumption play. And the habitual buyers, right? It's on the rise. So if you look on the left hand side, the active buyers is kind of stayed flat, but the habitual buyers continues to rise. And habitual is, they classify as basically anyone spending over $200 over the past sort of 12 months, and over 6 transactions. So the rise of habitual buyers is really, really positive, which is, I think, one reason why you've seen Etsy outperform a lot of other maybe e-commerce or social commerce names, is because they've really been able to keep those pandemic gains, and they've been able to monetize those buyers and the sellers as well better. And you can see that. So this is from April. This is from earlier this year, but Amazon is up there obviously as a top in the US, and eBay and Walmart. eBay people forget about, but it's still big. Walmart is there as a top visit for e-commerce, but Etsy is there at number 4, right? It's ahead of Target, and Target is a huge, huge company. Target's, I think, at $150 billion market cap, or maybe closer to 200. So it's a big company. And Etsy is only at around maybe 37, 38 billion. So it's actually relatively smaller, but you're looking at how people are still shopping in that area, going to visit it, going to see what's going on on the Etsy platform, and they're liking it, right? Because they're going back and they're buying things again and again. And as I said, monetizing that active buyer, right? So that line, again, even throughout the pandemic, has continued to rise, and it has an unbelievably good take rate. So the take rate is 18%, which is basically the amount of money they keep out of every transaction. So 18% is extraordinary for an e-commerce company. It's strong balance sheet. It's got about $1 billion in cash. It's moving again into new verticals. It's starting to use Etsy ads, kind of how Amazon is starting to serve up ads on its marketplace as well. That provides another revenue stream for the company. And unlike a lot of growth stocks nowadays, it's actually profitable, and posted about 90 million in net income for its latest quarter. So, it's a capital light model. It doesn't require a lot of investment, like say an Amazon obviously did to build out its own logistics network. So the capex involved in the business is is bare minimum basically, and so they keep a lot of the money that they actually generate, which is a great business proposition. and they're building out their mobile presence as well, which is positive. So they're starting to see a lot more downloads on Etsy mobile. And if you think about mobile as a platform for them, they're actually starting to see more GMV, so gross merchandise value, flow through the mobile app rather than mobile web, which is what they want, because they've said that they're looking at usage on the mobile app. A lot more people are actually buying regularly on the app as well. So the more downloads they're getting, it's again a virtuous flywheel for the company. Okay, I'm gonna jump on to number 4, which is actually a Hong Kong name. And this is Li Ning. So I think if anyone is familiar with the sportswear goods sector in China, they'll probably have heard of Li Ning. They'll have heard of Anta. And Li Ning is, I think is there as a number 2. And it's local, right? So I think, again, it hits all the right notes with the government. It's sportswear, it's local, it's encouraging, salubrious activity in terms of being healthy, in terms of doing exercise. It's great. It's great for the country. It's great for the people, right? I mean, I think China has one of the highest diabetes rates in the world. So I think the government really does want to take healthcare costs down. And part of what they want in that space is they want to encourage people to be more active. And if you're going to be active, you need clothing, you need shoes, you need shoe wear, you need all the accoutrements that you would expect with doing exercise. And Li Ning fits that perfectly. And you've kind of seen that play out over the past couple quarters and halves rather in its revenue. And what's really stood out for Li Ning is actually it's following a really successful model that Nike has implemented. And so Nike kind of realized, why should we sell our shoes and our clothing and our sportswear goods through third-party retailers, sports chains, when we can just go direct to the consumer, either online, and just ship it to them directly, right? And so what you're starting to see is that Li Ning is starting to do that as well. And for them, they're realizing that this e-commerce platform, this e-commerce channel, the gross margins are a lot better, and the growth is there for them as well. So they're starting to see that come through, and that's really that's impacted their same-store sales growth in a positive way. And as I said, gross margins, that boost in its latest half versus last year has come from e-commerce again. So they're realizing how big e-commerce is and how profitable it can be for their business. Okay, so where to next? This is the old Dogecoin question. I think for investors in these kinds of stocks, you really have to be aware of what you're investing in, understand the thesis. There is going to be a lot of volatility in some of these growth stocks, and so sort of be prepared for that. But I think this gives you a good flavor of what millennials are thinking about, what they're investing in, the type of technology that they're interested in as well. Before I kind of finish up, I just want to plug our own upcoming sessions. So we've got a couple sessions, webinar sessions next week from ProsperUs. We're doing a review of Singapore banks. I'll be hosting our banks analyst, Andrea Chung, and she'll be covering Singapore banks earnings and also the outlook for 2022. And on the right, we've got a technical analysis sort of intro to understanding how technical analysis can complement fundamental analysis. And we'll be joined by Jeremy, our in-house TA specialist. That's me, done.
Absolutely fantastic, Tim. Before you go, because I'm here and I have to play devil's advocate, we always talk about fintech being the disintermediary force, and we talk about, well, we need our Visa and our MasterCards anymore, with direct choices available to us. So how do you see fintechs impacting banks, and should we still be investing in banks? Banks stocks
that's
very
a good
popular
question.
with Singaporeans.
Yeah, I think it also depends on I think the main crux of what a bank does, like lending out money and sort of taking in deposits, I think that's really, really hard to and maybe in the West it's really hard to disrupt, because the bureaucracy involved in it is ridiculous, at least in the US, to get a bank license and then do that, go through all the hoops. I think in Singapore with next year, it'll be interesting to see what the impact is from maybe C getting its license, C Money, and then a few of the other players. But I think at this point in time, the Singapore banks have done maybe a relatively good job digitally of setting up their networks and seeing how that pans out. I mean, I think DBS has done a really good job. I'm a fan of, I guess, the DBS digital experience. I'm a customer of them. I've just heard good things from other people who've used them, and so I think their digital platform is done quite well. Although I think they did have an outage like the other day, but
Yesterday.
I mean, besides that, it was. I feel like they've kind of with PH Gupta, they've really pushed the digital aspect of banking, and so I think the other three banks as well are obviously following suit and they're doing their own thing. So I think we'll have to see it play out. I don't think I'd be in a position to say like don't invest in banks at this point in time, because I think you really need to see how it plays out, because there's always a lot of hype with these guys coming in, but they really need to back up what they say they're going to do with results. And so until that happens, I wouldn't be too scared at this point.
All right, good question from Fazira, who asks, is there any investment trend that millennials today are into, but that you think is risky?
I think is risky. Okay. Millennial, I guess an investment trends. I think a lot of these. I mean, we talked on crypto before, right, Michelle? Like, when I was on radio, I think a lot of these other more speculative coins, and I guess an investment trend would be the sort of meme stocks. I think those are risky.
Right.
When you take a big position in, say, AMC, or you take a big position in there are companies like Bed Bath & Beyond that have just shot up like 300-400%. So I think there's that whole Reddit crowd. I think that is a risky play because it's not really investing. It's more the speculation of trying to squeeze short investors and then trying to drive the share price up. So I think those are trends that I tend to be a bit more wary of. In terms of the overall trends, I think there's some trends in maybe, I guess, like AI is still at a really, really early phase right now. So you see a lot of AI companies coming out, but I think unless you're really in the weeds with the tech and knowing what happens, it's really difficult to differentiate between how they're utilizing AI, which is why I think NVIDIA is a great way to play it, just because it's hardware and NVIDIA is needed for AI, right, basically. So AI is something that I think still needs to prove itself. I think that's risky, but I think the rewards longer term could be huge, but it's a definitely earlier stage than a lot of other, I guess, sure win trends like e-commerce or digital payments.
Got a great bunch of people with us today, really, really engaged. And somebody asked earlier, Tim, do you want to drive a Tesla? Do you own a Tesla? And what do you think of millennials and sustainable investing?
I don't own a Tesla, although I would love to.
Do you want a Tesla?
I wanted to. Oh yeah, I would love a Tesla. I don't think owning a Tesla in Singapore would be the most economical decision, though. But I think I would love to have a Tesla. I've ridden in an Uber Tesla in Hong Kong. That was nice, and it's very quiet. It's a really quiet car. Greenwashing, I think greenwashing. I actually did an ESG webinar a few days ago, and we touched on greenwashing. I think it's one of those where when you do invest in companies, we are concerned, I guess, about greenwashing from companies. So I think they're being held to account a lot more. And so when you talk about how to analyze companies on an ESG rating, or an ESG front, I tend to look at how much emphasis they put on goals. Like, how are they setting goals, like concrete goals for themselves? And are they meeting them, right? Are they giving progress on those goals like every sort of quarter or every year? And that's one thing which I've noticed, a lot of the big companies, I mean, Microsoft's a great example, I think, is really taken a really big leap in the direction of actually being more transparent on how they're rating themselves on their progress. They're setting goals like, being carbon negative by 2030 and being completely net zero, basically taking all the carbon out of the economy that they've put in since 1975 by 2050. So there's some really amazing goals, right? So I think you really have to understand whether they're meeting them or they're making progress. And that's how I would say, I would view greenwashing, is understand what companies are doing and if they're just talking or if they're actually backing it up.
Okay, another question. Are millennials now really more risk averse than boomers were at the same stage of their life, Tim?
I don't know. I mean,
it's hard to say, right?
How do you think about boomers in their 30s and 20s? I don't know how risk averse boomers would have been back then, but I think I think the asset inflation over the past 30 years has made it really more. It's kind of driven younger investors to take more risk or want to take more risk, because I've heard stories of people buying property maybe in like London in the 80s for like a 95% mortgage and then flipping it like 3 years later for I don't know, like a 200% profit or something. So there are lots of those types of stories where you just won't be able to do that nowadays with the cost of property and the cost of real estate, and I guess all these the costs of just doing anything now. I think that's one thing when everyone's always like, oh, everything's so expensive, and then boomers are like, oh yeah, but you're not working hard enough, etc., etc. So it's just, I think again there's that generational divide. But I think millennials are more adventurous, maybe more willing to take the risk because they want that upside, which maybe boomers wouldn't have been willing to take that risk for the upside that there wasn't that upside, maybe wasn't there, or maybe those risky assets weren't there at that time.
Is the key to life, Tim, save more and just invest more?
Save more or invest more?
And invest. Save
yeah.
more and invest. Is that the key to life?
Yes, do both.
It is.
It is, yeah. There you go. It's from my mouth.
Unequivocally, yes.
Yes.
Listen, everybody. Yeah, go ahead.
Yeah. So no, I think there's always that. You always are always wanting to invest more and like, oh, I don't have enough to invest. But I think if you just do it monthly on a regular basis, that's what I think my parents told me, is just to do it regularly. I think on a monthly, you take the emotion out of it, and you're not thinking, oh, is it gonna fall or is it gonna like go up? And what you want to be doing is buying more as it continues to fall, right? I mean, that you basically want to be doing the exact opposite of what everyone else is doing, which is selling, at least on an ETF, level. I'm not talking about individual companies, but I think that's it. You need to save more, and if you can save more, try and put that away to, invest that into an ETF or invest that into something.
All right, Tim, you've been absolutely fabulous. Everybody, please shower some loves and likes and hearts onto Tim Phillips, because he's been absolutely stellar. Tim Phillips is wonderful, head of content and investment lead for ProsperUs at CGSCI Imbus Securities. Guess who's going to be sleeping on sheets that are softer than silk tonight? Not you, Tim. But we'll try to get some to you. Nurul Ashkin Grande and Christopher Jung, congratulations. You've sent us some really thought-provoking questions. And so each of you walk away with a premium set of sheets, and you get to choose Queen or King from the good people, our sponsors, Heavenluxe. And they're worth more than $280 each, made of 100% Austrian tencel and sustainable luxe fabric, handcrafted, apparently from the highest grade of eucalyptus. Yes, I learned something new today. Tim, so great to have you with us. Thank you so much.
Thank you for having me, Michelle. I enjoyed it. Thanks, everybody.
And everybody, thank you so much for being here with us. Please join us for the next Money Matters. It happens lunchtime. We're going to help you buy your first home. The wonderful Ismail Ghafoor, CEO of PropNex, and my friend Rachel Kelly on that particular webinar. Your chance to walk away with some cash and a Monopoly PropNex edition. Listen, I'm Michelle Martin. I hope you'll join me bright and early tomorrow from 9 a.m. on Your Money. For now, though, Tim, a big thank you. And thank you, everybody, for being with us. Good night.
Good night. Thanks, Michelle. See you.